Hey everyone, welcome back. Here's having a great Wednesday. Thank you so much for coming in to watch this video. And in this video, we're going to talk about a couple of things. So Mawson provided their production update for November. We'll get into that towards the middle of the video a little bit. We'll also take a look at Bitcoin transaction fees. A lot of you guys are still questioning that. How does that work? So I found a great article. It's about 6 minutes long. We'll go through it, read it, and I'll provide you guys some more insight into it. And then we'll also take a look at the Bitcoin miners to see where are they now as far as being overvalued or undervalued or fairly valued in my estimates right now. Okay, so that's going to be towards the end of the video, and I'll provide the chapters for you guys down below. But as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research, and I'm investing in the following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe. It helps me out tremendously, and I do appreciate it greatly. Okay, so let's take a look first really quick, just what happened today with Bitcoin and the Bitcoin miners. And it was a kind of weird day today. Bitcoin was actually down today. It's up. It's down now again. But let me see here. It was up today, but it was up higher. But the miners, for whatever reason, towards the end of the day, started falling back down in price, where they were up much higher in the beginning of the day. And it could be because the markets were down. The S&P, Dow Jones, and the S&P 500 were down. So I believe that's the reason why those miners kind of came back down from it. Bitcoin was up today quite nicely. It was up 3.33%. A lot of the miners actually did worse than that today, which was kind of surprising. But then we had some miners, like some of the smaller ones, actually do really well today. So we'll take a look at it. But obviously, Bitcoin's down a little bit here now on the day. It did close today at approximately 43,674 for Bitcoin. And we're still, chopping water here, trading sideways here on the RSI. Price is going up. So that's a good sign there. So, we may be heading a little bit north, but like I said, we still may come down to about 39,000 to the 41,000 mark, where we have the gap on the CME futures for Bitcoin. Okay, so that's something to be mindful of. We may still fall down. This could be just a little wacky spurt that we had here. Okay, now as far as the miners here, like I said, some of the smaller miners actually had a really good day. You can see Annie was up 31% today. It's continued to have a really good rally here in the last couple of days. Argo was up 8%. Bit Digital was up slightly, 0.9%. BitDeer was up 4%. Bitfarms was down 2% when it was actually up earlier in the day. Cypher was up 6.69%. It was up much higher. It was at a high today of $5. No, that's over there. It finished out the day at a high of $4.20, but then came down towards the middle of the day. CleanSpark, same thing. They were up almost 10% on the day, and then they fell back down. They finished out at 0.58%. Cores was down 9.18%. DigiHost was flat on the day here. DMG also, they were supposed to release their financial results for fiscal year 2023 today. I was looking for that on Setter website, on the SEC website. I couldn't find it yet, so we may update that tomorrow. Greenedge was down 4.3. Hive was up nicely today, 8.62. Hot was also up nice, it was up much higher today, but it finished out at 0.41%. Iris Energy was down 3.32%. Marathon was up also like almost 10% to 11% on the day, but then it fell back down. So it closed at up only being 0.59%. Mawson was up huge again, 26.71, right? So you're seeing Mawson, one of the smaller ones, Annie, one of the smaller ones, being up huge today. And it seems like investors are just looking for that next possible huge run up that we've seen in some of the miners here, and they're going after the smaller miners, which they think might have more potentially go up. Riot was up 1.38%, down 1.38%. Soluna was up 2.48. Stronghold was up 4.6, and Wolf was down 1.152. And then WGMI and BitQ, DAP were kind of mixed here on those two. So interesting day on the markets. Obviously, during the morning, things were up nice. Towards the end of the day, things went south. Okay, we'll see how tomorrow is. Tomorrow's Thursday. We'll take a look at it then to see what's going on as well. Okay, so that's it for that. Let's take a look at the article here, which is on how Bitcoin fees work. I was trying to figure out a good way to explain it to everyone here, and I think this article pretty much summarizes everything, and it's pretty short. It's about 6 minutes read. We'll go through it, and I'll give you guys also some little tidbits that I've learned over the years here as well, and my thoughts on it as well. Okay, so how does Bitcoin fees work? Bitcoin transaction fees are an essential component of the blockchain network. When Satoshi Nakamoto created Bitcoin blockchain, he implemented transaction fees in order to prevent spam transactions that could slow down and clog the network. Transaction fees incentivize miners to validate transactions and subsidize the diminishing block subsidy, helping support network security by keeping miners profitable. So in here, they're talking about basically when we have the halving events, we know that the halving events happen every 4 years roughly. And at that time, Bitcoin rewards get cut in half. So right now we're at 6.25. Come April, those rewards will get to 3.125. After that, the next 4 years, they'll get cut in half again. So again, less rewards for the miners. And eventually the hope is that the Bitcoin transaction fees will basically subsidize the block rewards going forward, so the miners can continue to generate revenue, be able to support the network, basically secure it as well going forward, okay? So that's kind of the thought process. Eventually, there's not going to be enough Bitcoin rewards given out to the miners to secure the network. That's why the fees are in there in the first place, because those will hopefully in time be enough for them to basically survive on that. Okay, Bitcoin fees are like air travel. There's also some other examples of this. Some have stated it as like a bus, right? You're trying to get on a bus. Air travel, I think, works here as well. So there's only so much space on an airplane, and so when you want to fly at a busy time of the year, you will inevitably pay more. If you want to bring a bunch of luggage with you on the flight, that will also increase the cost of the trip. Similarly, Bitcoin transaction fees are determined by demand, for being included in the next block, and the larger your transaction is in terms of data, the more expensive the fees are. So this is kind of where we get into the ordinals of things, right? Ordinals are little images that you can put on the blockchain, and those will take up more space than just a regular transaction that you would have with one wallet to another wallet, where you're sending, whether it's 1 Bitcoin or 1/10 of a Bitcoin, whatever it might be. That's a lot smaller transaction than if you're actually including something like a little pixelated image of something. Okay, so that's where we're seeing that huge increase here. Lastly, in May, now we're seeing obviously in November and December as well. So that may continue going forward. We'll just have to see how that demand for the ordinals goes forward. And I'll show you guys what the ordinals here are in a second. Okay, so something to keep in mind on that one. Okay, what are Bitcoin transaction fees? A Bitcoin transaction fee is what a user pays to miners to get their transactions included in the blockchain. The more a user pays, the higher the chance their transaction will be picked up immediately, as there's only a limited amount of space in each block. And each block is, I believe, 4 megabytes. Bitcoin transaction fees are an important income stream for miners alongside the block subsidy. Users who pay transaction fees are contributing to the security of the Bitcoin network. Okay, so each time you do a transaction between one wallet and another wallet, you will pay something. It might be very small, or it might be a little bit larger, depending on how congested the network is basically at that point. And if we look at here, let's take a look at Mempool here. This is a great website here. This shows you basically a lot of statistical information on what's going on with the blockchain at the current time. So right now, you're seeing transaction fees be somewhere around 48 Satoshis. So Satoshis, think of them as a Bitcoin having 100 million Satoshis in there. Okay, so that's basically Satoshis versus a byte, per byte or something like that. So it's $2.92, and for no priority, low priority is $9.67, medium priority, $9.91, and high priority is now $10.52, right? So this doesn't really make sense if you're going to be sending somebody $5 for something, right? You're going to be paying more in fees than you would for whatever you're owing for a slice of pizza or something, whatever it might be. So this makes sense when you're sending maybe 1 Bitcoin, right, which is valued at 40-some thousand right now. You're spending $10 to move that from your, let's say, Coinbase account or whatever account you're using for trading, and you're putting it into your hardware wallet, right? That's the fee that you would pay to move that money there. Kind of like if you go to Western Union, you want to send money from one place to another, you're going to pay a fee, and you're going to pay a heck of a lot more than here, right? Especially if you were sending like 43,000, you're probably going to spend a couple $100 doing that with Western Union. But here it's still relatively inexpensive, but it can go up more if there's a lot of demand, right? So you have to kind of keep that eye on that. Okay, so hopefully you guys understand that part of it. Let's see here. Once a miner has validated a new block, they receive the transaction fees and blocks subsidy associated with that block. The sum of the transaction fees and block subsidy is the block reward, right? So right now, the block reward that miners are getting from the Bitcoin protocol basically is 6.25. Now add on top of that any of the transaction fees that are included in that block reward. So if it gets pretty hectic and busy on the network, those fees are going to go up, and that's where we're seeing the fees go up here quite a bit recently. If we look at it, let's see here, right there. So you can see how the fees have gone up. Let me refresh this, maybe get the most recent data. So you can see right now, as of today, or as of yesterday, I believe this is Wednesday the 20th, we are, well, yeah, that's as of today, basically. The block reward here was 421 BTC per day. So if you divide that by 144 blocks, you're basically getting 3 BTC added per block, plus the 6.25 that's already in there. You're looking at about 9 BTC per block reward for the miners. That is huge. That accounts for 18.4 million in transaction fees on the network today alone, right? We peaked a pretty good high here in December 16th, where we were getting 23 million on that day. So it all depends on how things shape up. Also, if you look historically, if we look all the way back, you can see here that during peak bull runs, when Bitcoin is going north, to new all-time highs, there is a lot of demand because at that point, people are trying to get Bitcoin, head over fist, whatever you want to call it. And at that point, you're also seeing huge demand here. We saw that in 2017, 2018. We also saw it in 2021, right? Now, recently, we were seeing pretty good peaks here on the Bitcoin transaction fees in May that we saw here recently, and then obviously here again in November and December, which coincides with the ordinals themselves here, okay? Okay, see, block reward, some of those, yep, okay. With each Bitcoin having, the block subsidy drops and miners earn less, so transaction fees play significant, okay, so we played that already. Okay, so how are transaction fees determined? So transaction fees on Bitcoin are mostly determined by two factors. The size, right? We only have a certain amount of size to put in there. And obviously the user's demand for block space. The faster a user wants their transaction confirmed, the more fees they will be willing to pay generally. So if I want to move Bitcoin from my exchange to my hardware wallet, I'm going to probably pay a little bit more just to get that done and over with within a couple minutes, as fast as I can possibly, because I don't want it to be stuck there in a queue and waiting for that to happen, because I just want to have the security of knowing that my Bitcoins are on my wallet. Okay, so I'm going to pay a little bit of a premium for that. It could be the same thing for anything else that's going on the network as it is. Okay, so a block can contain a maximum of 4 megabytes of data, so there is a limit to how many transactions can be processed in one block. A larger transaction will take up more block data. So think of ordinals, right? Ordinals are these little, bit images, or what do they call those? I can't remember. There used to be a term for this, but they're very small, with very pixelated images of things. These are some of the latest ones, and this is really busy right now because this ordinals.com took about almost a minute to load. So I know there's a lot of demand on here, people checking it out. So that's why we're having, while we're seeing all of these fees happening right now. Okay, going back down here. Let's see here. A larger transaction will pay higher fees per byte basis. Okay. If you are sending a transaction with the help of the Bitcoin wallet, the wallet should display an option for you to select your fee rate. This fee rate will be calculated in Satoshis per unit of data your transaction will consume on the blockchain, abbreviated as sats vbyte. The total fee paid by your transaction will then be this rate multiplied by the size of your transaction. So if your transaction, depending on the size of it in bytes, that will get multiplied by that. Okay. Historically, transaction fees average between 50 cents to $2.50, but as you can see in the graph below, during periods of high demand for block space, transaction fees have a tendency to spike, and that's kind of what we're seeing right now, like I talked about in 2017, 2018, and then obviously in 2021 when Bitcoin was going to all-time highs. And then we're seeing it obviously here in May of this year, and now November, December for the ordinals things, okay? So if you wish to have your transaction confirmed immediately, your optimal fee rate may vary depending on the above factors. Best practice is determining an optimal fee rate is to consult your preferred block explorer like mempool.space, which is what we're looking at here. Be aware that fee estimation algorithms are fallible in certain instances. If you need your transaction confirmed ASAP, better to err on the side of caution and pay a higher fee, which is what I basically said. When you're trying to move your coins from an exchange to your hardware wallet, you're going to pay a little bit more, but it's going to guarantee basically that that's going to get taken out. And I think it shows here how many transactions are backlogged here someplace. Unconfirmed 331,000 transactions are kind of backlogged right now, or unconfirmed. So there is a backlog for it, and that's why we're seeing the higher fees as well. Okay. Let's see here. Mathematically, transaction fees are the difference between the amount of Bitcoin sent and the amount received. So basically, if I'm sending one Bitcoin from my exchange over to my hardware wallet, I'm not going to get that one Bitcoin. I'm going to get something less depending on how much I put in there for the fee. So keep that in mind as well. Conceptually, transaction fees are a reflection of the speed with which a user wants their transaction validated on the blockchain, which is correct. Okay. SegWit, I'm not going to get into it too much here. How transaction fees are determined on that. That gets a little bit more complicated here. We'll try to keep it as simple as possible, but you can learn more obviously about it if you want to. And then transaction fees tend to also reflect the speed with the user wants to have a transaction validated. When a user initiates a Bitcoin transaction, it goes into the mempool. Upon validation, it is included in the block. Miners choose which transactions to validate and include in the block, right? So they're going to look for the ones that have the higher fees, right? Because it's beneficial to them. When there's a backlog of transactions waiting to be validated, it creates an incentive for miners to process transactions with higher fee rates. Most miners target transactions with higher fee to byte ratios because they are trying to make the most revenue. When the network transactions begin to reduce, transaction fees will fall, right? So it's basically supply and demand. If there's a lot of demand, prices are going to go up. If there isn't, prices are going to go down. Bitcoin exchange and brokerage fees. So in addition to network transaction fees, Bitcoin exchanges and brokerages charge an entirely separate fee for using the services. You guys pretty much know this, so we're not going to get into that here as much. Then we do also have the Lightning Network. So this is also something that's been out there. Whereas on-chain fees are determined by the volume of data being moved on the blockchain and user demand for transaction confirmations, Lightning Network fees are determined in part by the value of transaction being sent along the network. So the scarce resources that blockchain consumes are energy and file space. The Lightning Network consumes a different scarce resource, capital. Chris Stewart, co-founder and CEO of SureBits. So payments on the Lightning Network cannot succeed unless there is a route between the payer and the payee, which can be indirect, and two, the route is sufficiently liquid. As an example, suppose Alice wants to send one BTC payment to Bob, but the only routes available are made of channels with 0.5 BTC in capacity. In this scenario, it would be impossible for Alice to pay Bob one BTC directly. She would have to settle for two 0.5 BTC payments. Fees on the Lightning Network are broken into two categories, but it is important to note here that these fees vary on node-to-node basis. So there's a base fee, a flat rate charged on a per transaction fee, expressed in thousands of Satoshis, and then the liquid provider fee, also known as fee rate. A percentage fee charged on the value of the payment, expressed in millions of Satoshis transferred. On the Lightning Network, node operators are able to set their fees at whatever level they feel compensates them for locking up liquidity. Okay, so we are seeing more and more of these Lightning networks popping up, and the good thing is that they are fast. And they're a little bit less expensive, but it does have to make sense for them also, obviously, to get the block then published on the actual blockchain for Bitcoin, okay? So hopefully that kind of makes sense for you guys on how that works. Now, as far as what is the, what's the time, well, not really the time frame, but what's the optimal usage on this? And it all really depends on the scenario that we're in right now. Right now, we're having a lot of demand through ordinals and things like that. People also buying Bitcoin in general because they think that the spot Bitcoin ETF is going to happen anytime soon here in like early January. So we're seeing that influx of possibly new users or old users buying up again, and along with the transaction fees for ordinals, right? Now, going forward, and this is going forward, and we're looking probably in the next 15 to 20 years, probably another, 4 or 5 cycles. At that point, I mean, Bitcoin is going to be on the block reward is going to be way down. We're looking at possibly less than 1 Bitcoin at that point. All right, we're going to be at 3.125 come the following halving in 4 years. After this one in April, we're going to be down to 1 point something. And then after that, we're going to be probably less than a Bitcoin, right? So eventually, I think Bitcoin is supposed to be mineable until the year 1,000, or not 1,000, 2,140, something like that. At that point, the miners have to rely on basically transaction fees. So it's nice to see that we are seeing a lot of transaction fees for the miners, right, which helps them secure it. But the bad thing is for micropayments. So if you want to pay somebody $5, like I said earlier, that's an issue. Also, with higher transaction fees, people might be less prone to use it. So you got adoption issues there possibly as well. They can move over to the Lightning Network, which does make the transaction fees lower there. But it's a different protocol there. It works on, it's a second tier, basically, network on top of Bitcoin. But there's, I don't want to say there's issues. I don't think there's any issues right now with it, but right now it's just, well, the only thing I can say is we need more adoption on the Lightning Network in order for it all to work well. at that point. But there is stuff being made for it to make it work even better. But right now, the concern is adoption, right? With fees being high, how will that impact adoption overall across the world, not just in the United States, but in countries that are unbanked? People that are unbanked right now, they're $5 for them is what they make in a day sometimes. So that's a huge hit on them if they have to interact with Bitcoin in that way. Okay. But hopefully this kind of sheds a little light on it and you guys understand how this kind of works. But going forward, like I said, it's going to be something that the miners are going to have to rely on more so than the block reward themselves. Okay. But that's it. So I just wanted to kind of go over this with you guys. I thought this was a good article. You guys can obviously see where it's at. It's at river.com, learn/how-bitcoin-fee works. And you can probably search it up as well. Okay, so that's it for that one. Let's take a look at Mawson here really quick as well. We'll do that right now. Mawson is one of the smaller miners. Obviously, we saw it pump pretty well here recently. But obviously, Mawson Infrastructure Group, Inc. announces monthly operational update for November 2023. Their information is not the greatest that we have come to expect from the miners, unfortunately. They do provide not really mixed data, but combined data for their operations, which includes hosting, self-mining, and also energy revenue from energy curtailment, basically, on that side of things. And here's what we do have. So number of Bitcoin mined equivalent for the month was 132. And that includes all other operation side of things. They report that down here. They had 47% month-over-month growth in total revenue, which was good. And that was based on them completing new customer co-location services deployed for a total of 15,876 Bitmain S19 XP miners. And then the co-location services revenue ramped up significantly to 1.98 million. And then their self-mining revenue increased with 24% month-over-month growth to 2.29 million. So this is the number we're going to use here. We're going to kind of estimate as far as what they could have possibly mined during the month here and how their operations were running. They also don't provide as far as what their current hash rate is, which is unfortunate. So we're kind of guessing on it right now, or at least using the old numbers that they provided the information on at that time. Energy management revenue of basically 500,000 there. Total power capacity was approximately 109 megawatts with capacity for approximately 35,650 miners at that point. Okay, so that's kind of what we have here. I don't think there's anything else. Operational update, they go over the same stuff here. Don't provide anything new. Yeah, we'll leave it at that. Let's take a look at the numbers that I do have for them here on Mawson. We'll go through it. So Mawson right now has 16.6 million shares outstanding. Stock price is $1.85. Market cap is at 30.7 million as it is right now. Their performance over the last 12 weeks has been really good here. They're up 114% from 12 weeks ago, 73% up from 8 weeks ago. From 4 weeks ago, they're up 114%. And then last week, they were down a little bit here, 1.67%. So they have obviously done pretty well here in the last 12 weeks. Current hash rate is about 1.4, 1.5 exahash. Their future hash rate for self-mining is supposed to be somewhere around 7.9, or sorry, not 7.9, 1.7, 1.8, somewhere around there. So they're pretty close to being fully installed here as it is. Their BTC production here, you can see here, I kind of messed up here, I think in August and September, where I used their Bitcoin equivalent numbers, when I should have been using their actual numbers for self-mining, what they provide as far as revenue here is. You can see the month-over-month difference, BTC per exahash efficiency, down towards the bottom here end of where the miners are typically. Bitcoin sold, they sell everything that they mine here. You can see their hash rate has been pretty flat here ever since June of this year. The value that their revenue is generating here each month, they peaked in August with 2.45 million. Hash rate difference month over month, BTC sold, they sell everything. And then looking down here, we already covered the institution side of things. The institution stayed the same here. It looks like that when we checked it on the 5th of December. And looking at the miners here, so like I said, I had them at 62.8 Bitcoin to get us to the 2.29 million that they reported as having for self-mining revenue. And that got us for November numbers here, them operating at about 21.5 days on average to get to 2.29 million in revenue there. Obviously, we saw a lot of miners that were operating for the full month actually end up having a lot of more income or revenue generated from the Bitcoin transaction fees, which we're not seeing here, which leads me to believe that they might have even run on less days, possibly around maybe, hard to estimate, but maybe a day less than this. Okay, so definitely a lot of curtailment there. And going up here, let's take a look at some of the numbers here that we do have for them. Let me see here. So total current assets was 13.65 million. Total current liabilities was 46.6 million. This is why I think they have been beaten down in stock price. It has been rallying here recently, and the only reason is because people are looking for beaten down stocks in the mining space because they've seen other miners go up in value 300, 500%. Right, so you're starting to looking for those smaller ones that could possibly do well as well. But with them, with the amount of debt that they have, total current assets, the reason that they are down is because that's it. But even given that, if that wasn't the case, I would have in between $3.22 to $4.84. They're $1.85. I think they're undervalued, but there's a reason why, and you have to look into the other reasons as to the operation side of things, right? They have been improving as far as hosting is concerned. That has been getting better for them. The regular revenue for self-mining has been improving as well as Bitcoin price is going up, so that's helping them out as well. Transaction fees adding on top of it, but not as much as we've seen with other miners as well. All right, so I think they're pretty well valued right now based on what I'm seeing here. Maybe a little bit undervalued, but they're just one that I would not, high risk, high reward, I guess you could say it is the best way. Okay, you might have a high risk with this one, but you might have a high reward in that it might go up because people are trying to find these kind of smaller miners that have been beaten down compared to some of the other miners. Okay. All right. So let me know down in the comments what you guys thought of that one. And then let's take a look at where the miners are right now as far as as of today. Basically, I took in all the numbers for where they ended the day. And then we're using my numbers here for them to look at are they overvalued, undervalued? And that's based on the last 3 quarters. So Q1, Q2, Q3, and then the current quarter that we're in, Q4, which is an estimated number for them. And then we're using PE multiples depending on their growth going forward. All right, so we'll go through one of these each by one at a time, and we'll see what they have to state or what it shows here. So HUT 8 right now is showing me that it's overvalued, but this is also incorrect, I think, because they did merge with USBTC, and I don't have the data for USBTC going back the last 3 quarters and the current quarter that we're in, obviously, right now. So that's kind of off a little bit. I think they probably should be valued a little bit more, probably closer to maybe 1.5 billion. I think right now would be a pretty fair value for them. They're at 1 billion right now as it is. Okay, so I do think that they're still a little bit undervalued from where they should be based on the combination of the 2 companies there. Okay, Riot right now is at $16.45. Their market cap is at 3.4 billion roughly. We have them at a P of 20 because they do have still a lot of growth going forward. So I think right now they are overvalued, but with them it's always difficult because you have the curtailment, which they get power credits for, and that's hard to track. And when do those credits get added each month? They don't report that, so that's kind of tough. They're probably very profitable when they do mine during the month because they do have those credits that they can use going forward. So I would say being at 3.4 right now, I think they are undervalued still as it is. Okay. Cypher is next here. Cypher is at $3.83 today. Their market cap is about 975 billion. They're currently undervalued. I think they should be somewhere around $4.90 to $7.35. That would be basically an increase if they get to those numbers, a 28% increase to 92% increase from there. And I think at that point they might be kind of fairly valued based on historical performance here. Right now, as we go look forward into all these miners, we know that Bitcoin price is going up. Their revenues are going up. They could definitely fetch more than this. Right, this is just kind of going on historical figures that we have for them as far as their performance over the last 12 months here. Hive was at $4.16. Their market cap right now is at 358 million right now. They're undervalued. I think they should be somewhere around $5.27 to $7.91. So about a 27% increase to 90% increase, somewhere in between there. Still is feasible for them. Marathon is at $22.10. They're at 4.9 billion right now. I think they're pretty fairly valued. Obviously, they still have a lot of growth left in them, along with some of the other miners. And like I said, they could fetch more going forward. But I have in between $15.71 and $23.57 based on the historical 3 quarters that we have and the current quarter that we're in, estimated right now. That would be negative 29% if we get down to 15.71, but I think we should be looking more at the 75% of PE ratio there. So another maybe 7% increase, if not more than that. They did buy another facility or 2 facilities here recently. That's going to help them grow even more. So they could fetch definitely more here. And as Bitcoin goes up in value, they're definitely going to be valued a heck of a lot more. Okay, DigiHost was $1.61. I'm at market cap of 46 million. Definitely a small one here, undervalued in my opinion. And they may I have them between $1.72 to $2.58, where I think they would be fairly valued. So that's still a pretty good increase there for them, 7% to 60% roughly. Next is going to be Iris Energy here. They're at 5.53. Their current market cap is at 368 million. They're definitely undervalued right now. I have them between $17.62 to $26.42. And they're obviously an increase of 219% to 378% would be feasible, I think, where they should be probably fairly valued at this point. Not sure why that one is not, well, it may get its turn, but right now it's definitely not being appreciated. They are going to be growing to 10 exahash, and they have plans to go beyond that as well. So that one is definitely undervalued, in my opinion. Argo is at $2.15. I think they're fairly valued right now for where they are. I mean, between $2.07 to $3.11 on the higher end. So that's still a 44% possible increase in them until I see them as being fairly valued. Bit Digital is at $3.31, market cap at 300 million. They're fairly valued as well right now. I have them between $2.31 to $3.47. That would be a little bit of an increase here of 5% on the upper end. Next is DMG is at 39 cents. Their market cap is at 65 million. I think they are fairly valued right now. I'll have to see what they report on the numbers here, so that may get updated here. They may be less or undervalued when that does come out, but we'll get that updated as well. But I have them between 33 cents and 49 cents, so they are fairly valued. Potential upside would be about 25% to being fairly valued. Bitfarms is at $2.72, market cap 876 million. They are undervalued in my opinion right now. They should be between $4.35 to $6.52. So on the higher end, 140% increase. It's towards the upper end. CleanSpark is at $10.49, market cap almost 1.9 billion as it is right now. They are undervalued in my opinion right now, and my targets are between $11.11 to $16.66. So that would still be a 59% increase on the higher end of things. Mawson, we just talked about a little bit here. They're $1.85. I do think they're undervalued, but there's a reason why, right? You have to look into the other reasons for it. But I have them between $3.22 to $4.84, and we talked about this, so I'm not going to go over it. TeraWolf, $1.95. They're currently at 464 million market cap. They are undervalued, but they also have debt issues as well. So this might be why they are valued the way they are. But I have them between $4.06 to $6.10. That would be an upside of, at the most, 213%, where they would be fairly valued. So somewhere between 108 and 213%. Next is Sphere. Sphere has had a nice run up here recently. They're up to $2.57. Market cap is at 36 million for them. I have them between $3.35 to $5.02. I think they are undervalued, but just need to see growth from them. We're not really seeing anything from there. So upside of 30% to 95%. Finally, we got Core at 95 cents. Their market cap is at 366. I think once they get out of bankruptcy, we're going to do, they're going to do a reverse split on the shares. We'll have to see how things play out then. But I have between $4.83 to $7.25. That would be an increase of 409% to 663%, but they are where they are because of the bankruptcy. Okay, Stronghold, $6.07, market cap of 48 million. They also have debt issues and overhead cost issues as well. That's why they are where they are right now. If it wasn't for those things, I would say that they are undervalued. But right now, I think they might be fairly valued for where they are. But if they didn't have those issues, I would say somewhere between $20.78 to $31.18, which would be an increase of 242% to 414%. Okay. Finally, BitDeer here at $8.18, market cap of 910 million. They're undervalued, definitely, in my book here. They should be somewhere around $22.47 to $33.70, which would be an increase of 175% to 312. But there is some concern, obviously, with BitDeer on them and the reporting and things like that. The latest report that they put out for their quarterly result, I thought I had some stuff missing in it, like the shares, the consolidation of the shares, or the statement for the shares, along with the statement for cash flow, right? So there's some stuff missing here. Maybe that's why the stock is where it's at. But this is it. Let me know what you guys think of all of this, and we'll call it a day, I think, for all of this. Obviously, a lot of numbers here. It's nice to take a look at those things. And remember, there's a lot of metrics that go into looking into the miners to see if they are, undervalued, overvalued. There's other things you want to take a look at: their debt to equity ratio, current ratios, all of those things. What's on their balance sheet? Is it a healthy balance sheet? Is it not? All those things play obviously into valuing these miners and where they possibly could be. I'm looking at the numbers here for this based on their production, but doesn't really take into account all of those other things, right? Debt, current assets, all those other things. we look at those values based on the quarter results, and we do that in another video. But I'll leave it at that. Okay, so I hope you guys enjoyed it. If you did, hit the like button, subscribe. Spreadsheets are going to be available to my Patreon members as well. That's still $5 a month. Then you get 10% discount if you do it for the annual on that one. And we have a private Discord channel there where a lot of this stuff will get published to them a little bit earlier than what you guys are seeing it now. But that is it. I'll leave it at that, I think. So we'll see what happens tomorrow. Tomorrow's Thursday. And then Friday is going to be interesting day before, obviously, the Christmas break here. We'll have, I think, Christmas on Friday. No, not Friday. Sunday. Sorry. Days are going by too fast. Sunday, and then into Monday, we'll have, obviously, the day off. If I'm bored, maybe do a video then, but we'll see. All right, I'm rambling on here, so I don't want to keep you guys any longer than I have to. Hope you guys enjoyed it, and then I'll see you guys in the next one.